Max Estates Q1 FY27 Business Update. Pre-sales jump 5x. What's driving the growth? Max Estates has delivered one of its strongest quarterly business updates, reporting pre-sales of nearly 1,100 crore rupees in Q1 FY27. The performance reflects strong demand across its residential portfolio despite a competitive real estate market. Compared to the same quarter last year, pre-sales have grown by more than 5 times. Such a sharp increase highlights both successful project launches and sustained buyer confidence. One of the biggest contributors was Phase 1 of the terraces, which was completely sold out. The launch generated nearly 500 crore rupees in sales, indicating healthy demand for premium residential projects. Apart from new launches, the company also reported strong sustenance sales of around 600 crore rupees. Healthy sales from existing projects demonstrate that demand is broad-based rather than dependent on a single launch. Another impressive highlight was the number of homes sold during the quarter. Max Estates sold 487 residential units compared to just 43 units in Q1 FY26. This represents more than a tenfold increase in unit sales. Such growth suggests that both project pricing and customer acceptance remain strong across key markets. The company's projects are primarily located in Noida and Gurugram, two of the fastest growing real estate markets in the national capital region. Demand in these locations continues to benefit from improving infrastructure and rising employment opportunities. Over the past few years, premium residential demand has remained resilient despite higher property prices. Homebuyers continue to prioritize branded developers with strong execution records and timely project delivery. Max Estates has differentiated itself through its live well and work well philosophy. The company focuses on creating integrated developments that emphasize wellness, sustainability, and premium living experiences. This differentiated positioning appears to be resonating with customers. Strong sales despite a premium positioning indicate that buyers continue to value quality and trusted brands. Another encouraging indicator is the company's collection performance. During Q1 FY27, Max Estates collected nearly 500 crore rupees from customers. Collections are extremely important because they determine cash inflows rather than just booked sales. Healthy collections improve liquidity and support ongoing construction activity. Management stated that annual collections generally account for around 20–25% of total sales value. This enables the company to fund construction without taking on additional debt for residential projects. For investors, this is an important point because lower debt reduces financial risk. Strong internal cash generation also improves the company's ability to execute multiple projects simultaneously. Looking ahead, the biggest growth driver is the company's substantial development pipeline. Max Estates currently has a gross development value pipeline exceeding 17,200 crore rupees. A strong GDV pipeline provides visibility into future launches and revenue potential. It also reflects management's confidence in long-term demand across the NCR real estate market. Major launches are planned during Q2 and Q3 FY27 across both Noida and Gurugram. Successful execution of these launches could further strengthen sales momentum during the current financial year. Key upcoming projects include Estate 105, Max 1, Estate 361 and a major residential development in Sector 59, Gurugram. These projects are expected to contribute significantly to future growth. Management has also outlined an ambitious long-term expansion strategy. The company aims to add nearly 2 million square feet of residential development every year. Its commercial real estate business also continues to perform strongly. The existing commercial portfolio remains fully leased, reflecting healthy demand for premium office spaces. The commercial portfolio currently generates annual rental income exceeding 150 crore rupees. Stable rental income provides predictable cash flows alongside residential development revenues. Over the next 5 years, management expects the commercial portfolio to generate annual rental income exceeding 700 crore rupees on a 100% ownership basis. This could significantly strengthen recurring earnings. The company also plans to add around 1 million square feet of commercial development annually. A balanced mix of residential sales and recurring rental income improves business stability. The Indian real estate sector has witnessed strong momentum over the past few years. Rising household incomes, improving infrastructure and increasing demand for premium housing continue to support the industry's long-term outlook. Branded developers have particularly benefited as customers increasingly prefer financially strong companies capable of delivering projects on time. This trend has resulted in market share shifting towards organized players. However, investors should also monitor execution risks associated with an expanding project pipeline. Timely approvals, construction progress, and customer demand remain critical for sustaining growth. Interest rate movements and overall economic conditions could also influence housing demand in the coming quarters. Although demand remains healthy today, affordability remains an important factor for home buyers. For investors, the key takeaway from this business update is the strong visibility of future growth. Record pre-sales, healthy collections and a large development pipeline provide encouraging signs for FY27 and beyond. Overall, Max Estates has entered FY27 with exceptional momentum supported by strong residential demand, disciplined cash collections and a rapidly expanding project pipeline. The focus now shifts to execution, upcoming launches and whether the company can convert this strong operational performance into sustained earnings growth.